Hello, all. I've been guided by the legal counsel that it is hello, all, not hello, everyone, because while hello, all, and hello, everyone are non-gender bias, your dog or your cat could be trading, and that is not included in everyone. So, hello, all. I am going to try and make this quick because there's a lot of ground to cover on this, and got to go backwards to go forward. So we're going to go ahead and get started with that because last week what we got was our fourth consecutive green Friday. Now, while the ranges have been spectacularly great, nothing, out of the ordinary, we did have that drop there where we closed down 3 points on Tuesday. Again, we're using our streak. That's what we're doing with our spreads. Close down on Tuesday. We fractionally closed down on Wednesday, which I'm going to go over in detail before we go forward into the charts. And then we had that, just absolute ramp up, which I'll show you on the charts on Thursday and Friday. Friday, again, closing above that 40-60 to close green, up 10 points, which, again, got 4 in a row. I've gone over this streak as we've gone through, and we got a big week ahead of us. And let me bring you on to the spreads. Quickly go over the spreads here because the spreads have been paying. The safe edges have continued to pay. I'll go over this in a separate video because Wednesday we did get the opportunity to get out of that trade of the week up 100%, and I'll go over it here because on Monday, like I had showed there on the weekend video, scroll down. The trade of the week, I'm looking for a minus 4,000 close on Friday. That's what I was looking to as we headed into this week. But I think this could be a one-day hold and we get out on Tuesday. And that was the 4,005, 4,000 spread. Tuesday came around, same exact post there in your email. Looking for that same thing. Still thinking we're getting a 4,000 close on Friday. Going to be a one-day hold until Tuesday. And then on Wednesday, because we still had not gotten our drop because our drop was so fractional, still looking at that downside target. We had that fake print at the beginning of the week below the 50-day moving average over there on SPY. Microsoft completely blew it with their earnings. Guided down, QQQ, lower target we were looking for down at 282. That worked out. It did work out. And here on the SPX Spread It Credit Trade of the Week, it was down to 2.25 at the time of the posting of the email, which was 6 o'clock in the morning. Would like to see $1 to get to close it, unless we break under 39.45, 39.33. Then I am suspecting that we are going to get the full credit going into Friday. So come off of this and go on to the charts and go through last week. Now, again, Monday, continuation from Friday. Ramped us up. Completely unexpected, but we got what we got, and that was where we got into our spread. Little bit of a dip there into Tuesday, right down to that trend line, and then bounced up off of it on Tuesday. And then we had Microsoft's earnings come out, and then we had that big gap down as we went into Wednesday. And Wednesday we came down, we broke down right below the 200-day moving average, coming right down to 39.50. And I posted there in the chat room, as you saw, that everything was satisfied as far as I was concerned for the dip. No reason to go get an advance to it. Only the dumb money is going to be getting long. Well, I was the dummy for that because as we came up here into the middle of the day, right at 12 o'clock, right back to the trend line, and the expectation was the trend line was going to hold after Microsoft lowering their guidance, and we were going to see a continuation to the downside to go and reach our target, which I'll zoom out on. But instead, we got this.
So they're going to pin down for James. James comes up top, gets it. James on the drive, gets in the paint, layup, missed it. And the game is over. Lakers furious. They thought he was fouled. Oh, excuse me. And it's now overtime. LeBron James so upset. Regulation is over. We go to the 5-minute OT.
And that sucked because the rest of the week we just ramped straight on up and everybody was over there trying to figure out, how do I roll out of this trade, because this has gone into euphoria land. And euphoria land, again, not talking euphoria land in a .com bubble kind of shape, but this was our down target, didn't get it, ramped up here, and now we are well above that trend line. We broke above that 4064. And from a much wider point of view, again, we are up in this zone that we have continued to be battling up at that 4115. Now, this is your wide view. And as you can see here, you have a brand new support line coming off of the COVID low and the October lows. This is on the SPX. And the expectation was to get down into this triangle, and it still is, before we get the energy to be able to ramp up to the upside. As of right now, everybody's looking at this and saying, you're wrong. Well, let's see how wrong that we actually are, because this week, again, major week. We've got the FOMC meeting on Wednesday. Then we have the ECB meeting on Thursday morning prior to the open, which is a hell of a lot more hawkish than the FOMC. Then we got the jobs report on Friday. During the week, the big names are AMD, Meta, Amazon, Google, Apple, Pfizer, Caterpillar, Ford, GM. But more than 40%, if I believe the number is right, of the S&P 500 is reporting this week. This is the week. And again, going back to that trend line, this is what everyone is looking at. Now, 2012, half of you didn't have pubic hair. So stop trying to bring 2012 into the picture. You have no idea where we were from an economy or what was going on at the time. Not downplaying it, not being bearish. I'm just bringing you back in time to what 2012 was. 2012, we broke that trend line, the same trend line that I've been showing here on the SPX. This one here, that same trend line broke over there in 2012. And obviously you have your results. It broke in 1982, which more than half of you weren't even born yet. I was 10 years old. So, again, can't compare it to the .com bubble that blew up. And then all you had to do in 2007 was replace the word .com with mortgage, and that blew up. And going into 2022, all you had to do was replace mortgage with SPAC, meme, or ETF, and that blew up. And now here we are going into zero DTE. Everything is zero DTE, and that bubble will also blow up. 1971, I wasn't born, so no comparisons. Here you go. Resistance line broke, bam, up to the upside, new all-time highs. 1967, again, same thing. Boom, new all-time highs. Come back into 1961 and you had the exact same thing. Resistance line broke, up in there, bam. And it happened in 1954. Two of you were alive. Alive. 1954, bang, boom. And then you got 2008. What? We broke it. Bam, gone. 2002, we broke it. Boom, gone. And for those that don't know, this big candle right here, that's 9/11. So, I have a lot of respect for that. My life outside of the U.S. began during that week. I have a lot of respect for this candle right here. Obviously, very oversold as we came down to that big bounce to the upside, and then we cratered down into the bottom of 2002. And then here you go with 1940, which, look, I my dates might not be right, but I'm pretty sure there was a John Belushi movie where he was a pilot, so I think this has something to do with World War II. But there, again, that's where you go with your history on that. big trend line, and everybody's looking at that trend line. And you have it over here on the NDX as well. The NDX came down to that exact same trend line and made contact for the very first time since March with that 200-day moving average. You've got a gap over here, which is coming back from way over here back in September from the CPI, which the SPX has completely filled. Over here is your gap to be filled. And then you've got another big gap way, way up here, which again, I have not been bearish. You go back into your emails from way back in October, all through 2022, where I was calling for 4,100, 4,200, 4,300 going into Christmas. We only got to 4,100. But again, I still have my upside view for 43.73. Now, I don't have it on the screen right now, but I will put it in your emails. And what I'm displaying here, again, just from a been doing this for a long time point of view, is our energy levels are a little bit too much. Up here at 78 over here on the RSI on the daily. It's just a little bit too much to encourage me to believe that we have the energy to be able to just explode through up to 43.75, 43.50 under our current situation. That's just my opinion. It's got nothing to do with anything else. I'm not bearish. I'm not bullish. I've got my positions, which I'm not adding to. If they work, they work. But this is the big week. And here we look at Apple from a 90-day point of view. Apple posted their lows from the entire drop of 2021-22 over here at the beginning of the year. And here we are up to 147. So, only a 22, 23-point move, but still, Apple, major recovery. We look over at Amazon and see them. And again, same thing. Lows placed here in 2022, right onto that COVID low line, and bam, you're up here, back up to 102. You can see your resistance right there, your October resistance, and here's your November resistance, and we're right back up to it. Again, not saying that we can't break through it. A lot of people went out there and spent money on their credit cards and are buying stuff they don't need. Fantastic. Google, different story. Bottomed over here back in October, beginning of November. But again, you can see here coming through, you're at your resistance level, and Google already hit my target for as we go into this year. AMD, reporting on Tuesday, again, different story, bottomed back here way back in October. You're up here at this resistance zone right around that 72.50, trend line insignificant. NVIDIA, interesting one here. Although they're not reporting, you're up 100% on NVIDIA from the October lows. So again, different things that just need to be brought into context. And again, with Tesla, everybody knows about Tesla, the big short squeeze that brought all the EVs in with it, 101 up to 178 in the course of 2.5 weeks. Big move, fantastic move. Still hasn't taken out the December highs. Still looking for that 208 level as far as my second target. But you got a lot on the table when it comes to this week. Here's Ford. Ford, different story. Yeah, you got a rebound, but you are nowhere near that 14 level. GM, same chart, same story. Not looking fantastic with GM. Don't know where we're going to get with it. Not trading it, but again, just something to be in touch with. And here's Pfizer. Again, nothing fantastic about Pfizer. Looking like it's going to the downside. But when we come back here and we look at some of the other names that are the big heavyweights, obviously Apple, Microsoft, Amazon. Microsoft, didn't touch on that because we had the earnings last week. But again, Microsoft, here you go. Right up here at your resistance levels that you've had for over 3-4 months. Big earnings drop, and then look at this recovery that comes back up here off earnings. So, I got nothing to say about Microsoft other than that you had a big NASDAQ tech stock, legs of the stock market, massive squeeze. Meta, also reporting this week, if I recall. And look, here you are, 88 to 153. And nobody's running ads anymore on Facebook. I mean, Facebook is fucking MySpace now. But again, come back here and start looking at some of your other names. Broadcom, AVGO, Pepsi. AVGO, we don't trade this, but I've had people ask me it before. AVGO, ridiculousness. Right back up to that resistance at 606. A hell of a lot better than any other name that's out there as far as where it's gotten into the charts. You're up here already back to the May, right up to the May and the February highs is where you're at on that. And Pepsi, because who can't stop drinking Pepsi? Pepsi, again, nothing looking great over here on Pepsi. So, when we come down into it from a wider point of view, which chart is it that I was looking at? Video. Yeah, video. I think that's good enough. Again, we're at we're at a spot right now where we've been stuck. We've been stuck for months, going all the way back here to September. We've been stuck. This obviously looks, from anybody's point of view, as a big cup. Here's your cup, and here's your handle. And this will just ramp itself through right on up into the 4200s. Very well possible. Absolutely nothing saying that it can't be done. Again, when you do want to zoom out and look at where your wider pictures are, which I don't think is appropriate or necessary, but again, here you are in your NASDAQ. Your NASDAQ drop over here from the dot-com bubble dropped 82.8%. All we did was drop 35% over here during the course of this year. And that was the 1 year move. It took until 2016 to get back to the dot-com levels. That's a healthy recovery. Not what we're doing here currently, which isn't very much. We're down here, but again, like I've shown, you've got this inverted head and shoulders with the lower low, and bam, you broke up. Lower high. Inverted head and shoulders that we had going over here. And what we should be looking for, according to where this is something up here into the 13,000 level, right back into this resistance support level up here, 13 grand, and then we'll see some kind of reality. From how all of these guys that report this week, the FOMC meeting, the due to be coming out CPI in another 2 weeks, and the full moon, which is on February 5, coming up this weekend. This is a place right now, having broken through that resistance area, that anything that you have in puts needs to be respectfully positioned to an amount that is 100% riskable and not needing to have one eye open while you're asleep. If you are in the calls, the exact same thing, because you have gotten more than your share of bullish movement over the course of these last 30 days from that January low, from that December low, and that delayed movement after 4 consecutive red weeks. This has been a pretty significant move, which when you come over and look at it, we are up 8.75% from the December lows, which dropped 8.2% from the December highs. So where we are in a reality point of view is a chop zone. How this trend line works is going to make all the difference as we go into this week. So have a fantastic weekend, end of the day, end of the week.